Hi guys, Lee Gettess here with the Market Sense for the week of February 19th of 2013. The charts I use come from the Trade Navigator software by Gettess, and our first chart is a weekly bond market. And after a 7-8 month period of a big long sideways pattern here, a wild swinging sideways at that, the bonds appear to be breaking down, or at least trying to break down out of this pattern. Now, I got to remind you, we're dealing with a market that has the Fed buying some $45 billion in mortgage-backed securities every month, so there may be some artificial support here. But we still have a little sideways pattern that we're going to have to deal with. This week so far, we've got the middle moving average here at 143.08 that they're kind of hanging around. And we actually have resistance a point higher at 44.08 and support down here a point lower at 42.08. And the fact that those are only 1 point apart from each other is kind of indicative of how quiet this is. I think we're at a point where we really need to see them go above 145 or below 142 before anything important will happen. And I'm not sure you can treat those as a pure breakout either. Obviously, a breakdown might find support at the lower Keltner band here, which is around 141. And the mid-Keltner channel is up, it's near 146, 145 and change. Either of those could be all they go to if they do break out of this little sideways pattern. But very quiet and very difficult to deal with a market that sort of doesn't seem to be trading freely. Now in stocks, speaking of nothing free, we have this incredible quiet escalator up here. It's so unusual to have a market be this relentless and yet be this quiet at the same time. The move just looks so phenomenally strong here, and yet you go all the way back to last November. This is only a 200-point move. 200 points, gosh, they could do that in a week when they were really excited. Okay, I'm exaggerating a little bit, but you get my point. There's just not a lot going on here. For as relentless as this move is, you'd expect they'd be up 500 or something, and they're not. They're very quiet. They seem to be moving even higher this week. They've gone above the resistance here, which is, it's like... The best resistance is actually about 1522 to 25, and they seem to be trying to go above that. Now, they do still have the potential to just turn and snap right back down and act like this never happened. The critical support probably to continue the trend up is at 1508, right in this vicinity here. But until they break below this 1495 green line here, they still look awfully good. When you look at the momentum indicator down here and you see just no swings, I mean, it's not, a hugely violent move up, but there's just no swings in it at all. It's a straight line just gradually moving higher. And you can see looking back over the last few months, that's pretty rare to not get any swings in the indicator. I would think we're due for a swing. I would think we're due for a swing down. Hell, we could go down to this mid-Keltner channel down here near 1450, and it would still look bullish as all get out. In fact, that would actually make sense. A move to the mid-channel would match this previous swing high here, and that's kind of what a normal market moving up will do. I have no idea if they will do that. If they keep going up, I think the next target's probably 1550, and who knows what beyond that. What we have really, and I don't mean to bore you with this isn't technical analysis, but what we have really is the Fed doing what they're doing in the credit markets is kind of making it to where nobody has a choice. This is kind of the only market that they can trade and hopefully make any money. So they're almost forcing financial firms and banks to buy stocks. And gosh, sooner or later, I think there's going to be a price to pay for this, but boy, it sure is hard to predict exactly when that'll come. Right now, they still look like they're going up. So that's all we've got for you today. Hope you can find something profitable to get yourself into. Thanks for checking in to hear what we think.